it's just really neat as a business has grown and we've matured as business owners on our journey to become CEOs, that the confidence of having those relationships with people that know, like, you got to find an expert like Steven that will talk to you, that will pick up the phone. I mean, I am not an accountant. That's not my deal. But I've called you and said, hey, man, here's what I'm thinking about doing.
Sometimes I'll tell you you're on the right track, right? And sometimes I'll tell you, no, you probably shouldn't do that. It's like the idea is fine, but it's just like how you go about doing it and the way you structure it. It might be a little bit different than you're thinking, or it might be a little bit more complicated than just putting something together and going. Sometimes there's a lot more consequences under the rug that just as a contractor and you're going from your day-to-day, you don't necessarily see or think about.
What up, everybody? It's Matt again. Thanks for joining us on the Green Pro to CEO podcast, where we talk about everything from life lessons to bring in pros that will help us on our journey. Today we have Steven May, CPA. Steven, you've been in our life for a long time. You've been on the journey with us as we've grown our contracting businesses. I'm going to give the audience just a quick intro. You're a CPA. You have your own firm there in Sweetwater, Texas.
Yes.
You have a beautiful family. So you're a husband, kids. You want to tell us a little bit about Ashley and all the babies?
Yes. Actually, I guess my 6-year-old's her birthday today, so that's kind of exciting. But
I did not know that. Happy birthday
either.
On Tuesday.
Happy birthday.
We should have had a party together.
Yes. So I guess I married Ashley in 2004. We have 4 kids together. We have a freshman, a 7th grader, a 4th grader, and a kindergartner who just turned 6 today.
So, that is awesome.
So it keeps us busy all the time. Lots of ball games and dance recitals and golf tournaments and just all sorts
super
of
busy season.
Oh,
right?
every night.
Life.
Every night.
Every night.
If we have dinner at the table, it's probably rare, even though we enjoy it. But
yep, I get it. So you have your own firm. You've been. How long have you been a CPA? How long have you been practicing?
Okay, I graduated from Texas Tech with a master's in accounting.
Texas Tech, my heart.
Yeah, it's the greatest.
Giga Maggies, baby.
Greatest school. Yeah. Rectum. Anyways, I graduated with Tech with a master's in accounting with a specialization in taxation in 2004. Okay. And then I went to the Metroplex and worked for a CPA firm from 2004 to 2010. I guess I passed my CPA test in 2006. I've been licensed since 2006 and specialized in the Metroplex and probably more in real estate. And now back in West Texas, we focus a lot on agriculture and construction and oil and gas. And so
I got you.
We kind of have a wide variety of clients because there's a wide variety of industry out here.
Sure. And just full disclosure, we've worked on in a professional setting in a client contractor type setting where you worked with our financial team to prepare taxes, planning, all those things. We've also have a partnership with another gentleman where we do some real estate stuff. We've done some hard money lending type stuff, things like that.
Correct.
Yeah. So just a little bit more about you. Probably being your CPA is not your you being a CPA isn't your biggest accomplishment. You are, again, you're a husband, you're a father, you are an avid real estate investor. You guys have how many rental properties do you and your partners have today?
That's a hard. I don't know off the top of my head. I think we have 27 doors. Okay. But I may be off a door or two.
All single family?
Mostly single family. We have 1 7-unit property, and then we have 1 duplex, and then I guess we also have in Tennessee together. We have a short-term rental that we purchased last year using a 1031 exchange once we sold one of our properties in Sweetwater, and then I guess my wife and I, we also have a short-term rental in Tennessee as well.
So you've kind of dabbled in the short-term deal, kind of like the Airbnb, Verbo type
Correct.
Industry, and then obviously, your regular rentals. Any fix and flips? Not really your thing?
We've done one or two. It's just, in my mind, the tax, and it probably goes back to my background. Whenever you do a fix and flip, the taxes are a lot higher. It's short-term, potentially. You get hit with the self-employment tax that's, real for contractors. Y'all feel that. And so, generally our strategy's been to hold it at least a year and rent it, and then you get a little bit better tax savings and tax. It's just better tax-wise to hold it a year. Plus, you get the tenant. You get some cash flow from it. Then the tenants. Then you can sell it. A lot of times, the tenants that we've had have said, "Oh, we really like this property. We want to buy it." And so sometimes,
it works.
We'll definitely sell anything that if somebody wants it and they want to offer us the right price. We're not emotionally attached to the property, and so we'll be happy to sell anything.
Gotcha. No, I get it. So, obviously, a very experienced CPA. You're playing the real estate game. Maybe your biggest accomplishment is something that I hold near and dear to my heart is you're a softball dad.
Yes.
So that's a new journey. You guys have been probably doing that, 3-4 years now? Has it been that long?
Well, we've probably been doing it hardcore since 22. I guess my daughter started, really, it probably goes back to 16 or 17 when I coached my older kids in T-ball. And they, for whatever reason, they never took to it. Then my third daughter, she really took to softball and really enjoyed it, which it makes my heart happy just because I was a big baseball. I played baseball throughout high school and really enjoyed that. And so it kind of, when my son gave it up, it kind of was kind of a bummer. But my third kid played it, and I think the baby, she's going to end up playing it too. But
something changes in the whole family when you get a kid that catches the bug. And as a dad, so we're on this journey also. Everybody knows it. My staff, everybody around me, if they ask you what makes Matt happy, he's going to say softball. Like, that's my life. I think about it all the time. Most people think it's because of the game. The truth is, I just really enjoy the time I get to spend with my kid in that setting. Not just my own child, but even the other girls, their parents. It's a deal. But getting into the elite, higher level travel softball thing, man, that's a commitment.
It is. It definitely is. It makes the older two kids, they hate softball. Anytime we say we're going to softball, they're like, no.
Yep.
But what's funny is the little one, she's like, can't wait. She's always excited. She goes, and especially the parks that have playgrounds and different things, she really enjoys playing that. And she'll, find 2 or 3 friends and meet new people at every softball tournament. So it's kind of a fun family deal, but it is a lot of work and it's a lot of time that you have to spend. Sometimes the other kids think, oh, well, I'm giving her preferential treatment, but it's just part of taking the time. And then I guess with our oldest two, we're really trying to do the same thing with golf and trying to get them going better there, which, it's kind of hard. They've taught themselves how to play, and so they've got all sorts of issues with their swings, and so now we're having to work.
And now as coach, now coach dad, now you know how to analyze things.
Right. Through softball, softball and golf, it's kind of interesting how much similarity there is as far as to the work and the swings and different things. So I get frustrated because it's like, y'all need to do this and that. And like, I'm trying. They just can't do it.
No, I get it.
It's a lot. It's fun and frustrating, and and it's a good way to spend time with our kids
and our family, right?
Correct.
We get so much time in the car together. People, they'll see us leave right after school and gone every weekend. It feels like, and people ask us like, how do you do that? My response is, like, when's the last time you spent 6 hours in the car with your kids and your wife, just talking about life, not playing on social media, not they're locked in their bedrooms, any of that. Like, it's a family deal, and Rita, you can attest to this. It probably drives you crazy every time you see Amazon show up with all the boxes of toys and tools. And these are tax deductible if you have a CPA like I do. It drives you crazy sometimes, but man, there's some real joy in it, isn't there?
Yes, and I know the kids love it.
So Rita's not all the way on board for everybody, but we do it anyway. So Stephen,
so when you get $400 bats, like now golf clubs are like $1,200.
They are now part of the budget.
It's like $600 for a driver, $400 for a putter. It's like you're in it $2 or $3 grand before you blink an eye.
Yep, but we can resell them for $50,
right? Or they get cluttered up in the garage somewhere.
Yep, that's exactly what happens. But so Stephen and I, we grew up in the same town, went to high school together. He was a little older than I, but Sweetwater, Texas, again, home of the world's largest rattlesnake roundup. That's our claim to fame. Man, doing business in West Texas is different. Rita, I'm going to have you. I want you to speak about the journey we've been on with Stephen. I can still remember the day we decided, hey, we're going to start a business. We're going to start a service business, a green industry business in the artificial turf industry. I can remember calling Stephen saying, hey, at this point, you weren't necessarily involved in our own business. You were working for corporate in the same industry. But, man, we went down to Casa Morales, which is a staple in Sweetwater, Texas. That restaurant has been there for, I don't know, it's always been there since
I've been got a Clark burrito.
I don't remember what we got. I always get the carne asada. I'm just a man of habit. But I can remember sitting down with you, telling you what I was going to do. You had the deer in the headlight look, like, what in the world is this guy going to do? But after that, I had to go to work. I had to be in the field. Somebody had to take care of the back end stuff. We connected you two, and now I really don't spend much time with, in the accounting part of it, unless I'm trying to convince Stephen to convince Rita to let me buy something outside of that. But let's talk a little bit about that. You guys, after that meeting at Casa Morales, Stephen goes home and probably tells Ashley, like, this guy's crazy. He's made some money. It's gonna blow up on him. Nobody can sell artificial turf in Sweetwater, Texas. But we did it. We made it a business, and it was bigger than Sweetwater, Texas.
Right. That was the part that I didn't understand whenever you came to talk to me. And one of the questions that a lot of times I'll ask a client is they're coming to me with this business idea. It's like, okay, what kind of business are we talking about? And this is probably what got Matt scared or whatever. He thought he was crazy. A lot of times I'll ask him, it's like, okay, you're talking about, are you going to do $100,000 a year? Are you going to do $1 million? Are you going to do $10 million? What kind of business are you doing? Because a lot of times the advice we give is going to depend on what size of business you have, because the way you run a $100,000 business is a lot different than a $10 million business.
And that $100,000 business, when ran right, can become the $10 million business.
Correct.
But as you grow through that, it's a journey. And
Correct.
That's kind of why we're here today. The reason we are putting time and effort into this podcast is to help all the green pros out there. You spend a lot of time in the contracting world, not just in your real estate business, rehabbing and things, working with contractors, but through these client relationships. And you see this all the time. The industry, the service industry, has not done a good job of educating business owners on what the CPA client relationship should look like. And it's so important that the most successful people I believe, and we're going Stephen, I want you and Rita to speak to this because you both sit on the other side of the table. Like, I can just make decisions so much better and with more confidence because I have a relationship where I talk to you both all the time.
Right.
It's not a one time a year. It's not, we talked earlier, it's not showing up in March or April. Like, April 13th saying, here's all my receipts from last year. Tell me how much I'm going to owe. It's not that. When we're a team, and I want you guys to speak to that on what that relationship should look like. And then we're going to discuss, how do you find that person that is the integrator inside your business that's working with this outside CPA or financial team or whatever it is. So y'all talk a little bit about that. What's y'all's relationship like? What's a day-to-day look like?
So I think over time, I mean, the relationship has developed, I guess I would say over time, from the small business that we started where, we would talk quarterly, something like that. And then, but now I feel like it's a constant conversation, like especially, and I think different times of the year more so. Like if there's any questions I have or different business moves that we're wanting to make, I'm always calling.
So you're not just calling asking like, how much tax am I going to owe?
No, I'm talking about, we're talking about all sorts of things in the business. Yeah, I mean, taxes is definitely one of them, but how will this move, like if we're discussing a business move, I call Steven and say, how will this affect us? Do we need to think about it a different way? And a lot of times he'll tell me something and I'm like, oh, I didn't think about that. And then I'll bring it back to you and Bubba and we'll discuss and we might change our minds or change the way we do something because we did talk to Steven. So he definitely guides us.
So a more proactive approach.
Oh, for sure.
Like, here's where we're going. Here's where we're at today. Steven, I can remember you coming to us saying, guys, it felt like it was a couple years we were having this talk of, okay, where do you think revenue is going to be?
Yes.
And as we got better at forecasting and building these things out and started having some consistent data, you're going, okay, cool. In a year, we probably need to start thinking about I may get this term wrong, but the formation, not the formation, but what our business is classified. We may have to move from one type of business to another so that because there was franchise taxes and all of these different things that if I'm just a guy in the truck that just builds stuff, I never think about that stuff.
No, and if you're not constantly having that conversation with your CPA, they can't help you and tell you and give you that advice to make those changes. How
common is it that you talk to your contractor clients on a very consistent basis like you do with, Rita and her team?
It's probably not that often. A lot of times we have a lot of times they may bring us numbers throughout the year, say, hey, can you tell me how much I owe? But a lot of times people make decisions and do things that may cost them a lot of money. There might be a lot of tax ramifications that they don't necessarily think about. They're just thinking, oh, I got to get this deal done. I'm going to do this and that. And so sometimes it can end up costing them a lot of money by just not contacting their CPA. It's a lot of times it's a quick phone call. A lot of times, we're happy to talk to you guys as far as giving you good advice. I don't know how much the issue you were talking about is y'all went from y'all are an LLC, but y'all switched from an LLC tax and sole proprietorship to a change to an S corporation. I told Rita, I was like, okay, whatever you do, this it'll be fine. It'll change things. It'll make things difficult if you ever want to merge and stuff. And then it wasn't 6 months later. Said y'all called and said, hey, we got this guy named Bubba.
Oops, we were not foreseeing that.
But those are the conversations that have to happen because that's business.
Right.
We don't really know, but it gives us so much confidence because I remember those conversations and I remember Rita going, you remember Steven said this? And my response was, we have a team. We're going to figure this out.
Right.
Mm-hmm.
Like, there is nothing it's just really neat as a business has grown and we've matured as business owners on our journey to become CEOs, that the confidence of having those relationships with people that know, like, you got to find an expert like Steven that will talk to you, that will pick up the phone. I mean, I am not an accountant. I do not, that's not my deal. But I've called you
Right.
and said, hey, man, here's what I'm thinking about doing. And
sometimes I'll tell you you're on the right track,
Right.
and sometimes I'll tell you, no, you probably shouldn't do that.
And that's
or
what
you
I
should
need.
do it in a different way. Or it's like the idea is fine, but it's just like how you go about doing it and the way you structure it. It might be a little bit different than you're thinking, or it might be a little bit more complicated than just putting something together and going. Sometimes there's a lot more consequences under the rug that just as a contractor and you're going from your day to day, you don't necessarily see or think about.
So you guys put yourself in my shoes. You're in a truck with a couple guys. You don't even have somebody answering the phone, right? Mm-hmm. There's nobody else. All the leads, all the customer inquiries are coming to your cell phone. In the back of your mind, you're listening to this episode right now and you're like, I need help. I know I'm leaking money. I know there's a way to leverage my money differently. I don't even know where to start. Rita, we're part of some masterminds. Shout out to the real business owners. We've had this conversation where people are like, I want to put somebody into my business that is the liaison between myself, the business owner, and our financial team or our CPA or whatever. So a lot of times we're calling them bookkeepers, we're calling them whatever, right? But what happens in the contracting world, I was fortunate. I married somebody that this is her world. But what typically happens is when that guy finally decides he's not good at writing checks, he's not good at keeping expenses, whatever, he walks in the house.
It could even be more than that. It's like, I know there's one contractor that we deal with in our rental deal. The vendor, he is a plumber, and he may bill us a year later. And that bill wasn't a cheap bill. It might have been, I think it was almost $10,000 that he sat on. And right now, I don't know how much we owe the guy, but it's probably pretty similar. And we hadn't had a bill from him in 6 months. I mean, it's not good for us as the customer, because we'd rather get the bill paid and move on and know what we owe the guy. And we hadn't heard from him, and I'm sure that probably after the first of the year that we'll get an invoice because he's trying to delay the tax or whatever.
So, and those
it's
are
not good. It's not good business.
It's not
practice,
good business, right?
Because it hurts your cash flow. I mean,
it's just not a good look either. We've gone through some acquisitions, some mergers and acquisitions. We've worked in other people's businesses and watched their AR, their AP, all these things. That's not uncommon. We have seen upwards. We've gone into a business, guys like, I'm drowning. And then we look, and his accounts receivable is $300,000, but nobody ever billed anybody.
Right.
And some of it's really old.
Yeah, and if you bill somebody, sometimes it's good to have, like, you're out there
doing
swinging your hammer, making sales, doing all the things. So sometimes you just need somebody to help you to call the people and say, hey, you owe me the money. And then you put somebody else in that position where you're not necessarily you're not the bad guy.
Typically, we don't want to do that.
Right, but you still have as the salesperson or the lead, the head of the company, you want to have a good relationship with the customer, and you want to put somebody else in between you to kind of be the hammer person.
So
that makes sense.
So the guy that's listening to this right now, just going, yeah, that's everything you're saying is me, but this is what happened in RBO. We heard it over and over and over from people. Like, where do I find this person? Who is that person? What are some traits that person has? Because typically what happens is
they hire their aunt or their mother,
their wife, or whoever that has zero, most of the time, zero experience. They're just that person. So they have to learn this. So in a perfect world, we can shake a magic wand and put somebody in a position to be successful. What are some traits that they should be looking for?
One, somebody that kind of knows what they're doing. I mean, and that's kind of hard to.
In regards to what?
To bookkeeping or accounting, who understands how to do it. Because I've seen some of the most people we work with a lot of bookkeepers, and it seems like the ones that feel like they're the best bookkeeper in the world end up, from our perspective, being the worst. What's been good about Rita and Lisa they will ask questions constantly. It's like, hey, I don't know exactly what this is. How do I do that? And most of the time they're on the right track.
There's no ego.
But a lot of times it's, be willing to ask a question and not be so confident that they know what they're doing, especially if they're a person that's not been trained in accounting or bookkeeping, and they just kind of, if they've learned it on their own, more than likely they're not going to do a great job. At some point, if you get to a certain size, it's good to have that person in-house and on your payroll, because if you have a bookkeeper or accountant in the house, one, they can help you with the payables and the receivables, but they also, if you don't know where you stand, if you don't know if you're making money or not, then how can you plan, or what if you're selling your job and you sold it for $100,000 and it cost you $98,000? Well, that's probably a waste of time for you and the deal. One thing goes wrong and you've lost a lot of money on that deal. So a big part of it is just knowing your numbers, and I think y'all are really good. Y'all have a really good cost accounting system that I don't necessarily work, that Rita does. I'm not a part of it, but it's important to y'all's business because y'all know your margins on every project, where kind of what I'm doing is I'm probably looking more at the whole picture, saying, okay, are y'all making money overall? Where are y'all at? I'm looking at it more from a holistic, above the forest, not necessarily in the forest. And
sure,
sometimes like a CPA or somebody that you can trust, especially if you have a good relationship with them, they'll help you navigate, because we understand financials. We know how to read financials. We can tell, okay, you're drowning in debt, or you're this, that, or the other. And so we can, whoever it is, whether it's me or somebody else, they can really be a benefit to you. I mean, we can be more than just tax people. We can, in some ways, we can be a outside third-party CFO that can just have another set of eyes.
Absolutely.
One thing, I guess a lot of CPAs, we're detail-oriented and we see things, and I think I heard somewhere that they said the difference between like a CPA and an engineer is an engineer can fix your problem, but a CPA can just tell you that you got a problem, but not know how to fix it.
Hey, I think that's fair. I think that Rita, I want you to speak to this, but so we all agree we should find somebody with at minimum basic accounting skills. They need to understand some very basic things. They need to understand data input and all the things that you guys heard him mention Lisa. That is my mother-in-law. So I made the same mistake when I started this business. I grabbed her because I could trust her, and she wasn't doing anything else. And I'm her favorite son-in-law, just so everybody knows. But isn't it important? I've just watched. So Rita now has a team of 3 individuals that make up what we call our financial team. Stephen and his staff's part of that. They help with bigger picture stuff. They also, your staff also handles our payroll, things like that. But you have an accounts payable. I guess you have 4 people.
I have 4.
Yep, you have 4 people that work on your team. You have our CPA. We have an outsourced, almost like a statistician. He is just amazing at forecasting and building calculators and all these things that allow us to make these decisions on how to move money and things like that. Then you have an AP person, Miss Lisa. That's what she does. She pays all of her bills, helps somewhat in the payroll side. And then you have a new help that is doing a lot of our cost estimating. Mm-hmm. Not as an estimator in the sales department, but almost like a controller. Like
he does every project. He does all the costs on it, pulls it all together, makes sure that we're looking at that we're buying properly, keeping each project under budget.
So it's kind of wild that we have and I tell everybody this, we're in the construction business, but we're almost we feel like we're in the data business. If we can get the best data If we can put really good data in, we can get really good data out, and then it's decisions. It makes everything so much easier. But I think one thing that we have to do, and this is not beating up on CPAs or bookkeepers, so no hate mail. Sometimes these people have personalities that are not conducive to teamwork, to communication. In your episode that we filmed earlier this week, Rita, we talked about that. You never want it to be in a cubicle, right? And that's a stereotype. It's not my stereotype, but it's a stereotype. I think it's very important that whoever you hire, if they have those basic skills, that they're great communicators.
And I would encourage them not to be scared to ask the question. I don't know how many times, I don't know all the answers. There are things I, get hit at with every day that I don't know.
Good thing I know all of them, right? Good thing you're married to me.
But I have great people on my team. I can call Steven and say, hey, Steven, I don't know how to do this. Can you walk me through so that hopefully next time I remember how to do it myself and I don't have to bother him about it. But there's been several times where I thought, I was like, okay, this is probably how he's going to walk me through it. And then when I call him, I start walking through it with him, and he's like, actually, Rita, if you think about it this way, it's going to save you on tax. And I was like, oh, that's actually a better way to do it than what I was going to do it. So, use your team around you. Use people that are the experts.
So when these guys are trying to find that person, I think that's a hiring thing. When you're talking to them, I think ask for some examples of when's the last time you collaborated with the CPA? Kind of what's that look like? And if they say, I just want you to send me all of your receipts on the 30th and on the 3rd.
Don't do that.
Yeah, right? Don't do that, right?
At least add them up yourself. That'll save you a lot of money on the compliance part.
Right.
Because, that's not what we want to do anyway. We want to look at the numbers in totality to give you better advice. If we're, adding receipts, all we're doing is cussing you and, your bill's going up even if it doesn't take a whole long time.
I think there's a whole...
And it's not that's not valuable. That's not valuable use of our time to help you. Exactly. Our time is more, does it make sense to add more equipment? Does it make sense to, get bonuses? Or what do you help you strategize on the business? Not necessarily, okay, we got to add up what your cost of goods sold are.
Exactly. But from the bookkeeper standpoint,
right.
I think I'm staying away from the person that says I've been a bookkeeper for 40 years and all I want you to do is send me your stuff on the 30th and I'll send you an email with all that data on the 1st. I don't think that's my person.
Right. No, the bookkeeper, if you're going to have a bookkeeper, there's going to be a lot of data there because you're going to write a check to so-and-so and until the bookkeeper gets used to it, it may... Who knows what that check's for? It could be for supplies. It could be a personal expense that's really shouldn't be in the business.
Understood.
But so, a lot of times, one thing, accountants can't read minds and bookkeepers can't read minds. So, a lot of times if you're writing checks, definitely put what the expense was for on there. That's probably getting into some of the minutia, but.
Yeah. So we're going to get into that right now. We've kind of talked about, hey, you have to find that CPA that
right.
you're going to mesh with.
Can I jump into
sure,
as far as the relationship with the client and the CPA? Most CPAs, we're busy all year round. We have stuff we're doing. We're busy.
I only thought you worked the week of April 15th.
Yeah, no, we're pretty busy all the whole year, and so we've got a lot on our plate, and so. We're not going to know that you've got a question, so reach out to us. We're going to assume that if you're not calling us unless we have that everything's fine. You think it's because as contractors, we're cheap and we're afraid that every time I call you, you're going to hit me for $250? Probably.
That should be a question we ask up front when we're finding our person.
Right. It's, I guess kind of how we do is we kind of bill at the end of the year and we try to keep our pricing pretty consistent. But most CPAs should let you know what it's going to cost. Now, I think too, there's a difference, as far as doing taxes, there's a compliance aspect, which is in my mind, if you've got a business and you've got a lot of stuff going on, and you're going to your mother-in-law, or if you're going to the tax shop that's in the strip center, I'm not going to name names, but more than likely you're getting somebody that their last job literally was flipping hamburgers at McDonald's, and they've been trained in, a weekend course, and they're not going to really understand the ins and outs and what's legal and what's not. A lot of times there's a lot of fraud that we see.
It's just data entry.
Correct. And so they're putting in whatever you give them. They're going to say, oh, you can deduct that whether you can or can't. So sometimes we may cost you money, and y'all don't necessarily want to hear that, but sometimes we may say, well, what you're doing is not legal, but it'll save you money in the long run, just because, if you get audited, I think there's about a 25% penalty on the underpayment of your tax, and a lot of times the IRS is going to look at, oh, you used a CPA. They probably pre-vetted to make sure you're not doing anything sketchy or illegal. We get hit with prepare penalties if we put something on there that we know is wrong or fraud. And so
I got you.
So a lot of times, one, we're going to try to help you save as much money as you can, but two, we're going to try to keep you out of the big house.
Understood. And we appreciate that. So just a full disclaimer here before we get into, I'm going to ask you a little bit more technical stuff that I want our listeners to have access to. And at the end of this episode, guys, we're going to give you contact information, a way to get a hold of Steven if you need some help or you need some guidance. But I don't know the exact wording, but this isn't what we're about to talk about is not financial advice. You're not telling them what to do. They should absolutely contact their own trusted advisor, their own CPA, correct, and get individual attention and advice. Is that
right? Yeah, we're gonna give. I guess we're probably gonna give some general tax law advice that's gonna be fact dependent on who you are.
Okay.
So, and I guess one of the things I told Rita that a lot of times, I guess being in the real estate world and the investing world, like we're in Facebook groups, and I'm assuming that contractors have Facebook groups.
Oh, for sure. And
they probably get questions from other contractors. What about this tax deal? What about that tax deal? And I call it the TikTok. A lot of times we see really, really bad advice on TikTok reels.
Sure.
That could, some of it's outright fraud, and some of it's just, it doesn't make sense. I mean,
sure.
I think I saw one, it was like, rich people put everything they own in trust. Put your business in a trust. Well, okay. That's real smart, because the trusts are about the highest taxed, highest tax entity that there is. They hit the maximum tax rate once you make $10,000. And so, yeah, there may be reasons that the rich put their stuff in trust, but most of the time it's for asset protection. It's not for tax savings.
So bottom line
that's just an example.
So bottom line is, like, this is not tax advice. Go find you somebody, get some help. Again, correct. Steven is able to practice in here in Texas, and
yeah, we can help anybody across the country.
Okay, so at the end, again, we're going to make sure you get his info. If you need some help, we trust him. We think you should trust him. Reach out. One of the hot topics that I want to talk about that means a lot to me, something that has driven me crazy from other contractors that are business owners, but also other tradesmen that want to come work for our organizations. They want to be classified, or, the tradesmen themselves, or the business owner, the contractor, the GC, whatever it is. They want to classify people that work for them as 1099 contractors versus making them employees of the organization. In Texas, we call it the Texicon Creed. It's very, very, very common to pay people under the table, to misclassify them as a 1099 contractor, simply to avoid everything that comes with the responsibility of employing somebody, right? So I want to talk about that, because early on, I learned that I don't get to just wake up tomorrow and decide that Joe should be a 1099 contractor and do all his own taxes there is actually, in the state of Texas at least, there are some guidelines. There is a test, if you will, that, and it's long, but it's real, right, Stephen?
Correct. Yeah, and it's probably not just for Texas. It's really across the whole country.
Okay.
And so
I only work in Texas.
The general rule of thumb that I look at is whether somebody's a 1099 or an employee is, can the person you hire, can they experience a loss by doing the job you're working on? So are they using your tools? Are they using your truck? Or do they have to show up when you tell them to? If you tell them, hey, I need you here at 8 o'clock and you can leave at 5 o'clock, they're probably an employee. Where they might be a contractor is, do they have their own business? Like, I think a lot of you probably use like a subcontractor where they have their own business. They have their own guys, and you're hiring them as a company to come in and say, dig a trench for you. And they can dig the trench when they want. They're going to dig the trench with their tools, and you're going to give them a certain guideline, say, okay, I need it done by Wednesday at 3:30, not necessarily I need you here at 8 o'clock on the dot to start working on it. And
you're going to take lunch break at 12, like all those kind of things.
Correct.
If do you see this a lot? Do you see misclassified individuals?
We see it all the time, and a lot of times people are like, well, what's the big deal? It's it's no big deal. Well, it's all fine and good until that worker and you have a disagreement, which is going to happen. It's more of a matter of when, not if.
Sure.
And then that contractor is going to go to the workforce commission and say, hey, I need an unemployment check. I lost my job. And it's like, no. And that's whenever, I guess they're not employed, they've been getting a 1099. Well, guess who's going to get in trouble for it? And guess what? They probably really were an employee, and guess what? You're probably going to have to pay them the back wage, and it's going to hit your unemployment. And that's usually whenever the rubber meets the road for 1099 versus employee. I think whenever Matt and Rita were first getting started, we kind of were going through this deal, and I was like, once it's like it stinks whenever when you have one employee that works, 10 hours a week. You still got to do the payroll taxes. You still got to file the quarterly reports. You still got to file the W-2. So in somewhat that matter, it's really expensive. It's a high compliance thing to deal with. And so a lot of times the contractors are like, oh, well, that's an extra cost, and I don't want to do it because, one, they don't want to do it because they really don't have the revenue to do it, and they're not big enough to do it. But they need that person to grow, and sometimes that's just an expense. You just kind of got to start. The good news is really once you get past that one, you got, say, 10 or 15 employees, it doesn't really cost any more to do payroll reports for 10 or 15 people as it does one person. And so that's probably my advice there.
Rita, you want to talk on that just a little bit? We see it a lot in our business now that we self-perform a lot, or we have a very good set of subcontractors. Mm-hmm. And we've been really diligent about this we made a decision early on with your help that, hey, we were going to do things right. Even if it meant it cost us some money today, we are those people. We are not going to pay people under the table. We are not going to employ people that are not legally allowed to work in the United States. It's just who we are. We feel we have a moral obligation to set some standards in our business, and sometimes that's hurt. It's been painful. We've lost jobs. We've lost revenue that we needed because although Matt won't do it, the guy down the road would. Our experience has been a lot of times when tradesmen are coming to work for us and they want to be 1099, there's usually some issues.
Yeah, and I think as a team, we've talked about it where we want to make sure we actually take care of the employee. Like, they may think by paying them under the table or paying them as a 1099 is actually better for them, but in the long run, it isn't better for them. If they're not tracking their own, if they're not treating it as a business truly, then it hurts them. And then if you're paying them under the table, like they're just running from taxes and who knows what else. Like there could be lots of other things that they're,
We've seen it a lot.
Yes.
What we've seen, they find guys that will do these things.
Yes.
That will pay them like this. And in our experience, it just keeps the cycle going. Usually these tradesmen are running from back taxes. Why? I came straight out of school and I found a contractor to work for, and all he did was pay us cash. So I didn't know any different. Mm-hmm. And now I'm 3 years in, and Uncle Sam now wants a whole bunch of money. So the cycle, they have a really hard time getting out of it.
And then
we see a lot of things with child support.
Get out of it. Yeah.
Mm-hmm. They worked for somebody. They put in their solid day of work, and somebody didn't pay the state what they were supposed to pay. They knew, like you said, it's a hassle. I don't want to employ 2 employees that just sit in the office making sure guys' child support's getting paid, making sure taxes are taken out. They don't want to do those things. So people that do these things, that misclassify employees, that pay under the table, do all those things, they are not helping these tradesmen get ahead.
No, not at all.
And it's a cycle. It's a real nasty cycle that we see in the construction industry.
Yeah, and there's a lot of people out there that, they work sun up to sundown, and then they're still behind.
Yep. So outside of the moral aspect or ethical aspect of this,
or the legal aspect.
yeah, and we're not giving legal advice, but we should talk about it. I'm talking to Stephen as my CPA. He's talking to me. He's not giving you legal advice, but there is some liability here if we know and we're conscious. If the state of Texas knows that they have sent us a letter, Rita, and said employee XYZ has to be garnished X amount of money, and we choose not to do that, there has to be a liability there, right?
Right. Yep. And a lot of times you'll see that with your employees is they'll get the letter from the state saying, hey, you got to pay child support. And then a lot of times those employees are like, I'm out of here. And they go to the next job until they'll work there a couple months until the state finds out where they're working again. And that's probably another reason. So they're hurting their own kids by not even though they don't necessarily want to pay their ex the money, but they hurt their own kids by not getting that child support paid.
Yeah, and not to get on a tangent, but the system's broken as far as I'm concerned with that, because what happens is a lot of times in the state of Texas, if I speak out of turn here, speak up, Stephen, but my understanding is they can garnish up to 50% of their earned income.
It's half of their pay. So the child support equals half of whatever their net check is.
So we have had, and we've gone through this process, we have guys that are working 60, 70, 80 hours a week making a few $100s because they are garnished so much. So I understand that they have to survive, they have to do these things, but we have had success of sitting down with them, and this is what separates good employers from everybody else. And I would actually call them great employers. We go through this at least once or twice a year. We find a tradesman that is just, usually if they are just absolutely elite at their trade and they're looking for a new job, there's a reason somebody hasn't kept them, because labor today is at a premium. And we get these guys, and it takes a few months, and then here comes the state knocking, and we have to make a decision at that point. And we have figured out a process. We decide what they are worth to us, right? How does this person leaving affect our business? And we game plan ahead of time. We sit down. A lot of times we get with you, right, and we run numbers. Sometimes this means a significant pay raise. And
sometimes it's more than you really want to pay them.
Absolutely.
Or maybe barely can afford, or it's going to make it tight.
But you have to make a decision.
Mm-hmm.
If that's who you are, then you have to make a decision. So we sit down and we run through those things, and we sit them down and say, here's your decision that you have to make. You have to decide whether or not you're going to move forward with this deal. And if you are going to, here's what it looks like. We're going to pay you X. We are going to pay the state of Texas this amount out of every single paycheck. In X amount of years, you're out of this deal, and you run no more. You get your life back. You're not hiding from anybody. Now, it's going to be painful for a year. It's going to be painful for 2 years. But in 5 years, now you can buy your house.
Right.
But having that talk up front with the employee, I think goes a long way, like with the relationship with the employee, getting, the buy-in that you're needing.
It's been successful for us. It's
Mm-hmm.
worked probably 75% of the time.
Yeah.
Some guys don't want to go through the pain of it, or there's some other emotional deal where they just don't like their baby mama. And that's we can't control that. But the guys that are stuck in this broken, nasty cycle that want help, they finally find the people that it says, we know, we've been here before, we've seen it, here's the process. It can be done and it can be fixed, and we should do a better job as business owners helping them. Mm-hmm. Steven, you are on the hot seat. I got one more thing I want to ask you. Look, everybody does it. I would do the same thing, man. April 15th. That's marked on my calendar. Apparently, we pay quarterly taxes also, and I don't have any idea what that means. But there are lots of things that are consistently left out when we come to see you, right? What are some of the tax items that people forget to bring you for deductions? Because this is a game.
Right.
Your job is to make sure I keep as much money legally within the tax code that I can.
Right.
I didn't write the rules.
Right. We try to use them. And a lot of that gets back to the planning.
Sure.
And it's like with business owners, everything that you buy that's necessary and ordinary for business is a deduction. And so this probably goes back to having a good bookkeeper or a good accounting system where you have, whether you use QuickBooks or Quicken or something, making sure you just do your accounting and your bookkeeping. That's important, because if you're bringing a bag of receipts, who knows if everything's going to be right? Who knows if it's going to be wrong, or who knows what you left out? We're not mind readers, so if you didn't bring it to us, we're not going to know.
Sure.
Some of the deductions, I guess, that business owners have available to them, you have the health insurance. It's kind of a way that you can, it's treated different for owners than it is for your employees. So that's something that you'll need to work with your advisor on. The other thing is retirement planning and retirement packages. I think there's deductions there for both the employees and the employer. And then
that offset that cost, right?
Because that can offset it a little bit.
What we always look at is what's it going to cost me? And
right.
Sometimes I'm surprised. They're like, yeah, it's going to cost this up front. But when tax season comes, here's where we're at. And I'm like, okay, that makes sense.
Right. And a lot of times, like a health insurance, I'll just use a round number. It may be about $1,000 a month per employee. And some employers say, okay, well, we'll pay $500 of it, and the employee pays the other part. Usually the part that the employee gets deducted out of their paycheck, that reduces their income tax burden, and it also reduces their Social Security and Medicare tax that's withheld on their paycheck as well. And then you have like the typical, child care deduction is probably one that a lot of individuals, just forget, or, you get up to about a $600 tax credit for your, if you're paying daycare, if you're a married family and both spouses have income.
I got you.
And then I guess charitable deductions. That's kind of gotten harder with the tax change in 2017, because you got to have about 25,000 roughly of a total of property taxes capped at 10,000, mortgage interest, and then charitable donations. So that's, with that tax law change, that's been kind of harder to do. But I guess the big thing is making sure that you account for all your business expenses, especially if you don't have a good set of books, and if you're the guy that has a bag of receipts that may or may not know what he really really made. And then I probably want to have one more thing on that you have to be careful because there's a lot of contractors will bring in, they'll have say total revenue of say $500,000, and every year they have $550,000 of expenses. So every year they have a $50,000 loss. So at some point that really doesn't compute, and they've done it for 20 years. And it's like,
sure. Because we have to be in business to make a profit. Right?
Correct. Yes. But I mean, a lot of times, and where it can hurt you is whenever at some point down the road, if you're wanting to sell the business that you have, somebody's gonna look at your tax return, because the bank's gonna look at it and say, well, what you do is no worse than what's on your tax return. You can give me a set of, here's my real numbers. That's what I just put on my tax return. Well,
sure.
The bank or a buyer of the business, they're going to look at your tax return, and the numbers really need to match. So you may be costing yourself a lot of money even though you'll have to pay a little bit more tax up front, you're going to pay yourself more. One, you're not going to be bankable, and
sure.
Sometimes businesses need cash flow, lines of credits, or if you want to buy a building to enhance your business and grow your business, and you need a loan, the bank's going to look at that. Well, you've lost $50,000 for the last 10 years. And if you say, well, I really make $150,000, but I always show a $50,000 loss, you're just hurting yourself, even though you're saving the money on taxes in the short run. And then whenever you're getting ready to sell, a lot of times people will pay, sometimes it's based on your revenue, but a lot of times it's based on a multiple of the profit, 5 to 7 times whatever your profit is. Well, negative 50,000, you're not going to get anything.
I'm not great at math, but that doesn't add up very well.
Right. Where if you really do make 150,000, you multiply
sure.
that by 5 to 7, you might get a pretty good payday, especially
sure.
if you set up your business where, I think like what Matt preaches, where you're not, a man in the truck, where you've got systems and employees in place where you have something that you can actually sell, and you're not just selling a job.
Sure. Well, man, that's all great advice. We're going to wrap up here. How does everybody get a hold of you? If they need some help, they need some advice, they just want a quick consult. I know you're on social media. They can find you under Stephen May.
Right.
It's a personal Facebook profile. Is that right?
Yes.
Okay. How do we get a hold of you in a professional setting?
Probably the best way is to reach me by email. It's at stlmay@cpa.com.
Okay.
Or you can call my office, which the phone number is 325-235-1788.
Or you can find him at any softball field across West Texas.
Right. Yeah, probably at Kirby Park.
Yeah, Kirby Park, Abilene, Texas, starting in about January.
Right.
January or February. Anyway, thanks for joining us today, man. We appreciate you having on. Rita, thank you for being here again. And to all our green pros out there, we'll see you soon.